عليكم ورحمة الله وبركاته. الحمد لله رب العالمين والصلاة والسلام على محمد سيد المرسلين وعلى آله أجمعين. Thank you so much, Brother Hassan, for your kind introduction. And Alhamdulillah, it's a wonderful initiative by Taif and Adel, usually before last several CSAA exams to host such live Q&A. And I am here actually today just to facilitate the Q&As. I may not have exact answers in some cases, but I will try to attempt those answers from questions from different perspectives. And inshallah, definitely will try to guide you for the exact Sharia standards or process or basis. So first of all, I congratulate all of you and make dua for all of you that you can succeed in the upcoming CSAA exam. Those who are going to take this exam, most probably this will be the last CSAA exam, inshallah. And after that, we will have new updated structure of the exam as has already been notified by Ayufi and already started basically in Arabic as of now, to CSA and CSE, and we also have CPSS, a certificate of proficiency in Sharia standards. So inshallah, we look forward to see all of you getting certified from Ayufi with this prestigious qualification, inshallah. Today's session, as Brother Hassan mentioned, is more about some very specific questions. Please share your questions in the Q&As so we can attempt those questions if we can, inshallah, throughout the session. If for whatever reason we cannot, inshallah, we'll get back to you within short period of time after the session finishes. So I think we already started receiving some questions here. I will directly jump into the questions, inshallah. All right, Bismillah ar-Rahman ar-Rahim. The first question I see from Shahid Raza. Kindly advise us the most important standards to be revised, keeping in view of the time left for the exam. All right, see, this is a very common question that we receive before the exam, and particularly when it's just around a week or so left. And when I first appeared for the exam, I also had the same question in mind. And this assumes that you have already gone through the entire Sharia standard at least once or more than once, okay? Because if you haven't gone through the entire Sharia standard text yet in its entirety, then definitely you need to go through the entire standard, all the Sharia standards, every single clause. If you have already gone through it and now you just want to revise it, so first and foremost, you need to revise the concepts, right? There are a number of Sharia standards which details the different contracts, for example, mudaraba, musharaka, and the likes in a very detailed manner, right? We have Sharia standards for each of these separately. So first and foremost, ensure that you revise these standards so that the concepts are well revised. When I say concepts, because later on in other Sharia standards, you will see that there are uh, practices based on or applications based on these concepts, based on these clauses that are mentioned in these standards. I don't want to name any, but you can just go through the table of contents and you will see, for example, as I mentioned, murabaha, ijara, salam, mudaraba, musharaka, istisna, you have loan, and then maybe like tawarruk, commodity murabaha, zakat, waqaf, and the likes. And there are a lot of Sharia standards on applications. So even if you cannot go through the applications, please go through the concepts to ensure that you revise and remind yourself with the basics. And if there is any question you cannot remember properly, try to check the options against these concepts. And most probably, inshallah, you will get your answer right. This is number one. Secondly, for many, for each and every individual, we may have some difficulties for some standards or some clauses, right? So, and I assume that when you have gone through the standards, you have marked it, or at least you have in mind that these are the standards and clauses I have issues with, right? So these things also please do revise before the exam, because if the concepts, if the questions are coming from these portions, you may have trouble to answer it within that given period of time. And last but not least, there are few standards which mention some ratios, particularly, for example, the financial papers, I believe, standard number 21, where you have certain ratios and numbers. So please also check these. And these are all in Sharia standards. When it comes to governance standards and auditing standards, ensure that you have read through in its entirety. None of these were missed out. At least if you have gone through the entirety, you have understood, inshallah, you can address the answer. So I think that summarizes the query. I do not see any standard as most important standard. Rather, all of these must be properly read through, gone through. It's just that before exam, we revise the concepts again, so that we don't, when we look at the questions, we don't forget any of the important ones. That's the idea. Thank you, Shahid, for your query. Next question I have from Rafiu, if I have pronounced your name properly. In SS9, SS9, you have mentioned that clause 3, to let me open the standard first. In Ijara, I believe. SS9. All right, I have the standard in front of me. So you mentioned about clause 3(2). Okay. In this clause, you mentioned an asset may be acquired by a party and then leased to that party. In this case, the Ijara transaction should not be stipulated as a condition of the purchase contract by which the institution acquires the asset. What is definition of acquire in this context? Can you give a practical example? Who is the asset acquired by a party to that party and for what purpose? Okay. So basically, how an ijara contract happens, right? Ijara can happen standalone ijara, or it can be mingled with shirkatul milk, for example, which is a joint ownership, and we call it diminishing musharaka, and that is addressed separately under the musharaka standard. Even though the ijara portion is not detailed there, but the concept is mentioned there. Now let's just focus on ijara, in a typical ijara. So let's say corporate needs a machine. Okay, a machine. Basically, they need financing to purchase the machine. So they will go to an Islamic bank, ABC Islamic Bank, and when they mention that I need financing for this particular machine, and they give the Hamidiyya or whatever required, they sign the master agreement, etc., etc. Then the next step is that the financial institution, the ABC Islamic Bank, goes to the market and acquires the machine, right, from the vendor, from the supplier, some from the seller. So what this clause is saying, so after this, after they acquire this, then they will have a separate contract to lease it to this client who is a company and who wants actually the machine, right, to finance the machine or the equipment. Now, what this clause is saying is that an asset may be acquired by a party and then leased to that party. Uh, in that case, the ijara transaction should be stipulated as a condition of the purchase contract by which the institution acquires the asset. So, as I understand it, that when you do the first leg of the transaction, meaning the institution must acquire the asset, purchase the asset. When they do this, they may appoint the client to purchase on behalf of them as well, just like we can do in Murabaha as well. If that is the case, right, or in any other way that we have the same party involved, the client is involved, that that he is the one who is acquiring the asset or helping the bank to acquire the asset, and he is the one who will get the lease ultimately. So in such case, it must be ensured that each of these contracts are separate. Each of these contracts must not be made a condition into another. And this is the same thing you will see in all the hybrid contracts. In Islamic financial industry, we have a lot of hybrid contracts. By hybrid, I mean a number of contracts coming in a sequence. For example, in Murabaha, we will first have a promise to purchase, and then the bank will go and acquire the asset. Or if it appoints the customer, then it will have a wakala or agency contract to purchase, and then the customer will go and have a purchase agreement with the vendor, and then the customer will hand over the possession to the financial institution, to the bank, and then we will have the actual murabaha aqad, where the purchase cost as well as the profit is stipulated with the client. So you see there is a sequence of transactions. Now in all such cases where we have a number of transactions or number of contracts rather, we must ensure that the contracts are not stipulated in one another. And IUFI share standards has a separate share standard on this matter particularly. Which standard it is? Anyone, can you recall? We go through is the it is the standard named combination of contracts. Okay, which yeah, it is standard number 25, combination of contracts. In Arabic, al-jam'u bayna al-uqud. And you will see it is further detailed in that standard that whenever we have contracts combined for a particular deal, then each of these contracts must be separate. They must not be conditional into each other. So that's what being addressed in this clause. I hope you understand. Thank you. All right. Next question from OK Deji. I'm sorry if I did not pronounce your name correctly. Your question is, please, what's tamattu share? So to give the context, in standard number 12 on Sharika, Musharaka, and modern corporations, in this standard, IOFI has mentioned few modern corporations, a few classic examples of Musharaka or partnerships, and few modern ways of corporations or modern partnerships rather. And they mentioned tamattu shares, preference shares, etc., etc. So some of these examples, even I don't find properly. I didn't have the uh, you know experience of seeing this in reality. But in general, don't bother about the definition of tamattu share. Just look at the feature and the ruling. The ruling is basically, if you look at, there are a number of shares, different types of shares mentioned. And the main point there is whenever you have preference in terms of financials, for example, preference in profits, preference in remaining of the assets during liquidation. This is where we have Sharia concern. None of these preferences are permitted. So either it's called a tamattu share or a preference share or a redeemable share. Today we have so many creative types of shares as well. We have simple agreement for future equity, safe. We have preferred equity. We have or also known as preference shares. We have RCPS, redeemable, convertible, preferred shares, etc., etc. So whatever the name is, we don't bother with the name and definition. What we look into it, does it have a feature of giving preference in terms of profit? Meaning that these type of shareholders, either we have preference shareholders, tamattu shareholders, whatever, do we give them profit before ordinary shareholders, in the sense that if there is anything remaining after giving them, then only we give to ordinary shareholders? In other words, there is a possibility that the ordinary shareholders or other group of shareholders may be deprived from profit completely. If the answer is yes, then this condition or this feature is Sharia non-compliant. Likewise, do we have a feature that during liquidation of the company, this type of shareholder will get their money first, and only if there is anything remaining, then other shareholders will get their money? If the answer is yes, then this is also a condition that is not compliant with Sharia. If there are other type of preferences, for example, if you go to the office, you get a priority service. If you call the customer care, the customer care will give you a priority service. Or there is voting rights, priority voting rights, whatever. Different types of priorities or preferences, more administrative. Then we don't have issue. So that is the summary of that part. So don't bother if you don't understand tamattu share. I also properly don't understand the definition because I haven't seen that. I have seen ordinary shares. I have seen preference shares and different types of preference shares. So maybe it's a type of share almost close. I can see the features very close, but don't bother about it. As long as you understand the feature, that's fine. All right. Next question from Demi. Akin Jidi, Assalamu alaikum. Are we expected to memorize all of the zakat rulings of different livestock, the loss of different threshold? No, I haven't seen actually questions coming up from the livestock part, because usually when it comes to financial institutions, we usually don't deal with zakat on livestock. It's usually zakat on amwal, on wealth, right? So no need to memorize this. If you can memorize, it's good, but for the exam purposes, I don't think there is a requirement. The purpose of including these in the share standard is when we talk about zakat, it should encompass all the different types of wealth or mal, including the livestock. So as long as you understand the method, I think it's sufficient, inshallah. Okay, next question from Ahmad Hamza. Assalamu alaikum. So far this exam, will there be any essay questions? No. The questions are all MCQ or multiple choice questions, meaning that for each and every question, you will have a number of options, usually 4 options. You have to choose one option from it. You have to choose the right option. And in some cases, there could be several right. So you choose the most right options, which is much closer to the right. So sometimes it could be tricky. That's why I mentioned the second thing as well. All right. I see some hands being raised. Kindly share your questions in the Q&A tab so we can have an organized manner to respond to it. If we have finished all the questions in the Q&A, then we can open, inshallah, for live questions for those who have raised your hands. Thank you. All right. Next question from Saad Salim. Salam Sheikh. What is the passing ratio criteria? Um, uh, which is 70%. So we have to get overall 70% of marks, or individually 70%. Usually it's 70% overall. I don't remember exact percentage, it's 70 or 60 or whatever, but whatever you have seen, usually it's overall, meaning that is because it's 100 marks, so you have to get 70, as simple as that, right? I hope you understand the question. From Demi Akinji again, Assalamu alaikum. Will this recording be shared? I hope it will be shared. Inshallah, Brother Hassan will respond to it. Okay. Muhammad Noor Hisham, according to 422 of standard number 23. Okay, let me go to standard number 23 again on agency. Okay, standard number 23 is on wakala. Okay, wakala means agency. So the question is, when agency is paid, it falls under the shareholding on ijara. Does wakala bil ujra is wakala contract or is it ijara contract? Okay, good question. Good question. So if you understand the gist of wakala and ijara, you will see that there are two unique features in each of these contracts. Ijara, we assume when we talk about ijara here, we talk about ijara al-khadamat, ijara of services. In IOFI, there is a separate standard of hiring of persons, which is basically ijara al-khadamat, like when we employ someone um, as a full-timer or part-timer or to do certain jobs. This is what we call it, ijaratul khadamat. Sorry. So in ijara, The subject matter is basically the work, right? I hire someone to deliver what? To deliver some work. Now the hiring could be different. I may hire him for the whole month, right? So as long as he makes himself ready for the work, he gets paid. I may hire someone for a very particular work within a given period of time. So as long as he delivers it, he gets paid. So there could be different types. But the main idea, a main subject matter in Ijara is the work, the khadamat, the services. In Wakala, the subject matter basically primarily is to act on behalf of the principal because it is agency, right? So act on behalf of the principal. Now, acting on behalf of the principal may be as simple as just, maybe executing some contract, or it may involve some certain services as well. Okay. Secondly, when it involves certain services, we may pay him or we may not pay him as well. Like he is doing it for free as an act of charity, as an act of uh, brotherhood, for example. So the point here is when it involves certain deliverables, like I have appointed someone as an agent to act on behalf of me, to decide on behalf of me, to sign contract on behalf of me, and at the same time, he has to deliver something, and I will be paying him. So this has a component of ijara as well. We will still call it wakala, but it has a component of ijara. And that is why some of the requirements will overlap. For example, in ijara, because ijara is always paid, right? If it is not paid, we don't call it ijara. We don't call something, some given a service given by someone for free as ijara. Ijara will definitely have ujra. Ujra means fees, salaries, commissions. Now, ujra must be specified. This is the ruling of ijara. Services must be specified because the service is subject matter. So it must be specified. If it is a full-time job, then what type of job we expect from him, how many hours he has to work, where does he work from, is it remote or physical, etc., etc. This must be defined. If it's a part-time job, then we have to define the exact job as specific as we can. Likewise, when we put the ijara component in wakala, we also have to define the scope of wakala services. So you mentioned about wakala bil istismar, for example. Sorry, you mentioned wakala bil ujra. Okay, a fee-based wakala. So let's say wakala bil istismar, investment agency. So we have to define what the investment agent will be doing, like he will be investing into what are the conditions, what are the terms of reference, etc., etc. At the same time, we have to define the the fees, the ujra, the wakala fee that we want to pay him. If it is not defined, then we cannot, then it will not fulfill the requirements of the wakala bil ujra because the ujra part is exactly same as ujra in ijara. So I hope that answers your question. To summarize, we will still call it wakala even though it has components of ijara. So we don't call it ijara, we'll call it wakala. Okay. Thank you. Next question from Muhammad Karim Khatak. Please explain. The institution may accept a payment from a debtor who is in default that is in excess of the amount of debt. Uh, okay. Provided there is no contractual condition, whether written or verbal, or custom or mutual agreement relating to this additional amount. An example of this case can also be seen in the Ijara Muntahiya with Tamlik. In this case, the amount of rent in excess of normal rent of similar property is dropped, where ownership cannot be transferred to the lessor for a reason which the lessee cannot stop. The best is when you ask questions, please give reference to the clause number as well as the standard number. But if I just look at the question, um, maybe your concern is how can it be possible that we don't allow him to give an excess amount, but then we allow him if there is no custom, no mutual agreement. See, the idea is here that when we make it part of the contract that if you default, you have to pay extra, right? Let's say we gave him some financing and he's supposed to give some, let's say in ijara, okay? So he is supposed to give rent. He's supposed to pay rent or fees within a stipulated time period. Just like when we rent a house, we are supposed to pay the rent maybe by 5th of each month, 7th of each month, 10th of each month, etc. So what if we put a condition that if the tenant does not pay within that time period, then he has to pay, let's say 1%, 2% of the rent. So either we call it interest or not, it is riba and it is prohibited because the additional one we have put into the contract and it is an excess on the debt and it makes it riba. Now, what this part of the question that you mentioned, what it mentions is that what if it is not mentioned in the contract, it is not discussed, we have not agreed about it, there is no customary practice about it, and I, as a tenant, when I pay to the owner, to the lessor, I pay just an extra out of my gesture, goodwill, whatever. This will be okay. Either I pay to the owner or let's say in this case the institution. Why it should be fine? Because it's just like any other tabarro, any other charity, any other gift, uh, which is given unconditionally without any contract. So just like any other gift is permissible, this is also permissible. But the moment it becomes part of the contract or it is repeated, then there is a Sharia issue. So take the same scenario. If it is repeated, if it is made part of the contract, then it will not be permissible. I hope it answers your question. All right. Aisha Shehu, Salam Alaikum. Please, how many questions we are expecting? If I'm not wrong, around 100 questions. 100 questions. And you have to answer all of these in 3 hours. Okay, thank you. Again, okay, Deji, can we help clarify the differences between Arboon and Hamish Jiddiya? Okay, Arboon and Hamish Jiddiya both are kind of security deposits, meaning that both of these payment we pay in advance. But there is a slight difference in the application as well as the ruling, Sharia ruling. Hamish Jiddiya is paid during the promise phase. Promise phase means, let's say a customer comes to the financial institution and he promises that if the financial institution purchases XYZ asset from a supplier, from a seller, from a vendor, then this client will purchase from him. So once he gives this promise, he signs this promise, the bank or the financial institution needs something to ensure that he will keep his promise. He will come back and purchase from me. He will give the money payment price. To ensure this, the bank may demand some advance money or security deposit known as Hamish Jiddiya. So this is coming before the contract with the customer during the promise phase. Arboon is when the contract has already been signed. Okay, we gave the customer a time period, let's say 1 month. If you come back within 1 month, then we continue the contract with you. If you don't come, then we consider the contract is void. So the contract is signed, but there is a period, there is an option. If within that option period, the customer doesn't come, the contract will be void. And during that time, we ask him to put some advance money. This is Arboon. So this is the slight difference. Again, Hamish Jiddiya comes before the contract during the promise phase. Arboon comes after the contract is signed. The difference in ruling, Sharia ruling is for Hamish Jiddiya, the bank or the financial institution or the seller cannot confiscate or freeze the entire Hamish Jiddiya if the customer backs out until and unless there is an actual loss. How do we determine actual loss? For example, in the same example, the customer said, I will purchase from you the Toyota or Nissan or whatever car, this model, that model, if you buy, I will purchase from you. And later on, he didn't come. Okay, so let's say the car was priced at 50,000, uh, let's say Riyal, and because the customer has given, let's say, a Hamid of, let's say, 5,000 Riyal, okay, and the customer was supposed to buy the car from the bank at 60,000 Riyal, for example. So again, the price of the car at which the bank purchase is 50,000. It was supposed to make 10,000 profit from the customer and sell at 60,000. And the Hami Jiddiya is 5,000. Now, after the customer backed out, the customer said, oh, I don't want, I'm sorry, I made a wrong decision. The bank has to sell to someone else, isn't it? It has to auction or sell to some third party. When it's sold to third party, let's say it was able to sell at 51,000, meaning, remember, it bought at 50,000 and it sold at 51,000. It was supposed to sell at 60,000 to the client, but because the client went back, it went to someone else and sold at 51,000. Now, is there any actual loss? From IOFI point of view, there is no actual loss. There is an opportunity loss of 9,000 Riyal, but the bank has already made a profit of 1,000, right? So there is no actual loss. In this case, the bank must return the entire 5,000 to the client. If the bank was only able to sell at, let's say, 49,000, there is an actual loss of 1,000. Why? Because the bank purchased at 550,000 and it could only sell at 49,000. So there is a loss of 1,000. Now the bank can keep 1,000 from Hamid Jiddiya and return the rest. How much was it? It was 5,000 minus 1,000. So the bank will return 4,000. So in summary, for Hamid Jiddiya, the financial institution, the seller cannot confiscate the full amount. It can only keep the actual loss. For Arbun, it is a bit different. For Arbun, the financial institution or the seller can keep the entire amount. So let's say the same example, they both signed the contract. Remember, I mentioned Arbun is after signing the contract. So they already signed the contract. And in the contract, it was 60,000 Riyal. Bank purchased at 50,000. They already signed a contract for 60,000 and took an Arbun of 5,000. But there was an option that if you come back within 30 days, we will continue. If you don't pay within 30 days, we cancel. Now, after 30 days, the person didn't come, right? How we treat it? So in this case, the ruling is the financial institution or the seller can confiscate or freeze the entire amount, meaning it can keep the entire 5,000. But according to IOFI standard, it is still better to only recover the actual loss, like Hamid Jiddiya, and return the rest to the customer. So even if the ruling is a bit different, but if we can see that according to IUFI, the best is in both cases. Hamid Jiddiya, it's a must. They must return after the actual loss. In Arbun also, they are saying it is better that you only keep the actual loss and return the rest to the customer. But it is permissible if you keep the entire amount, still it's permissible. It is not that it is not permissible. All right. Another question is the time. Is the exam time pressured? I don't understand what is pressured, uh, but it is 3 hours, as I mentioned. From the time you start your exam, it will show a clock. You can see how many minutes and seconds left. So it's exactly 3 hours. Next question from Magamed. Regarding the standard number 3 on procrastinated debtor, it gives the definition of default in payment being a debtor who fails to pay and have not proven insolvency. I wanted to know if the standard only address the issue of debtors who have not proven insolvency. What happens to the debtors that have proven insolvency? Do the rules like charitable donations apply? Okay, so if the debtor is insolvent, the debtor has been able to prove that he is insolvent. In that case, Does he need to make the donation? Contractually, yes. Meaning that because he signed a promise, an undertaking to pay the donation, so he has to pay. However, because he has proven insolvency, the financial institution should give him concession. When we do Islamic finance, it's not only about the rules, the contracts, rather beyond contracts, we also have the maqasid Sharia, we also have the learnings of Sharia. And as we know, Sharia teaches us to give concession to those who are really insolvent. As Allah subhanahu wa ta'ala mentions, وَإِن كَانَ ذُو عُسْرَةٍ فَنَظِرَةٌ إِلَى مَيْسَرَةٍ. If someone is really insolvent in a difficult situation, then he should be given nazira, concession, time until he is solvent or he is okay. So I hope that answers your question. Faridullah, assalamu alaikum. I request you to set up a free course for the students of madrasas like us, because paid courses are difficult for the students of madaris in particular, like take a comprehensive course on Islamic. Thank you very much. For madrasa students, not only madrasa students, any students who wants to take free courses, alhamdulillah, nowadays there are many. There are many MOOC courses, for example, in EDX, by ISDB Institute, IRTI, even by our institutions like at TAIF and Adil as well, and our another company, IFA Consultancy in Bangladesh as well. We often provide free courses or free programs. But for definite reasons, sometimes we have to keep things premium so that we can have proper attention to the classes and commitment. Because sometimes if things are free, the commitments are also low. So what I would suggest you that if you or anyone wants to attend any course, you cannot pay, you should always, not only us, but any other provider, you can write to them. Usually, even people do not mention in the website, almost all the institutions have some policies for those who cannot pay, right? So you should write, you should request, and inshallah, make dua for that. Allah will make it easy for you. Jazakallah. Muhammad Salahuddin, what is the difference between Hamidiyya and Arbun? I believe I have discussed this in very detail. Again, another question, Al-Jama bain al-Uqud. Yes, this is the one I was mentioning. Next question from Diallo. Why istisna should not be drawn up as murabaha contract? Does it mean that there shouldn't be a profit on it? I did not really understand the question. Again, please put the clause number and standard number to give full perspective. If I understand what you are saying, that istisna is not allowed to make profit, that is not right. Let me give an example. A client came to the bank. He needs finance for what? For developing a real estate property. So the bank enters into an istisna contract with him, right? Meaning the bank is mustasna and he is sania. And as a sania, he is basically he can definitely make some profit, whatever he based on mutual negotiation. So let's say his total cost was $100,000. He can sell the property for $110,000, meaning the same one that he actually is going to a cost of $100,000 with the bank, he will have an istisna of $110,000. After the property is completed, the bank does not have any interest in such properties, right? Because bank is just financial intermediaries. They have to sell it to someone else. The bank may appoint this istisna client to sell it to a third party, let's say, for $120,000. All of these are okay because this is a sale contract. As long as mutually negotiated upon, no issue. So I really don't understand the actual concern you had. Perhaps you can ask the question again with proper reference. When do you find out the results of the exam? When it is sent to you, and usually it is sent within 2 weeks, as I know. Here it is disconnecting again and again in minutes. From Muzammil, I think it's an internet connection from your end. All right, from Abdullah bin Tawqir. Assalamu alaikum, Abdullah from Dubai. Can you explain the difference between different types of khiyar? Khiyar al-tadlis, khiyar al-taghrir, khiyar al-ghaban. In IOFI, I think if I'm not mistaken, we don't have all the AR mentioned here. Let me just quickly go through the standard. Yeah. So in standard number 48, there are few khiyar. Khiyar means options. Okay. Khiyar tadlis is discussed. Sorry. Okay. Let me just quickly summarize. So khiyar tagrir is basically an option which is given on the ground of verbal deception. So between tagrir and tadlis, those are both are deception, but tagrir is more verbal, more written. Like for example, a feature is written which was deceptive, which was wrong, which was misleading. Something was mentioned by the seller which was misleading. So this is tagrir. And tadlis is deception by conduct. It could be in various ways. The standard mentions for you, and um, there are many other examples. I think if you have any particular clause, but I mean, in the clause it also already mentions, but I just wanted to summarize it. And ghaban is when you have excessive price by the seller. You know, let's say something was the market price is only $10 or something. It was sold at $100, for example. Now, is there any definite measurement or criteria how we know if there was a ghaban or not? Honestly, there is none other than if there is a regulatory requirement. For example, during the Osmani Caliphates in Majalla, they have in Majalla al-Ahkam al-Adliya, they have kind of came up with some numbers. I don't recall that in its entirety, but I remember for real estate, it is something high, meaning that you may have quite excessive pricing in real estate because it's not a daily product. But for daily necessities, crops, vegetables, groceries, it's a very small percentage. If I'm not mistaken, I think they mentioned around 5%. So meaning that if somebody is selling beyond 5%, it's already Ghaban. And with Ghaban, there is why there is an option during with Ghaban, because with Ghaban there comes some sort of zulm, some sort of financial oppression on the buyer, right? And sometimes Ghaban can be opposite as well. For example, some buyer, he's very clever, he's very smart, and he was able to convince the seller. Maybe the seller is just a farmer or somebody who doesn't have much understanding or knowledge about the market. And the buyer convinced him that, you know what, your product is today very low price. Why not you sell to me at low price? So let's say in the market it is $100, and he was managed to convince him to sell at, let's say, $20, $30, something like that. And it was a deception, right? Because the seller didn't have this idea. So it's a gaban for him as well. So in both cases, there would be an option to the mazboon. Mazboon means the mazloom, the one who was the victim of this gaban, the price gouging. So I hope that answers your query. Jazakallah khairan. From Magamed again, another question is still on procrastinating debt standard. It is stipulated that the recovery of legal expenses is allowed to charge those costs to the debtor. Does it mean that if the creditor suffers losses, he is allowed to charge those losses to the debtor? Knowing that any financial compensation is prohibited, I want to know what is the line between what is allowed and not. Very good question. So there are two different things. One is charging an extra, an excess on top of the debt. Like for example, we signed a sale contract with a client for $10,000. Let's say we sold to him a car or whatever for $10,000. He is unable to pay on time. He has defaulted. So we have mentioned that if you default, you have to pay 1% penalty or compensation or whatever. This is not allowed. For this, it is mentioned in IUFI standards. Firstly, it is not allowed. It makes it the contract riba. An alternative is that we mention we give a separate undertaking where the customer undertakes to donate to charity. Let's say the same 1% he will donate to charity. So this is an alternative, but end of the day, it is not. In both cases, it is not entering the revenue of the bank. Remember that. In both cases, it is going to the charity. Now, what you mentioned is the legal cost. is the legal expenses. What are the legal expenses? So, for example, if someone has defaulted, the bank has sent notices. He does not honor the notices. He does not respond. He does not, come to the bank and justify days and months, years, and sometimes. In such cases, the bank may have to employ legal people to file legal suits against him, and that definitely comes with expenses. It's not for free. Sometimes maybe the bank will appoint recovery agents, to recover the funds. So recovery agent is different, by the way. A recovery agent, the bank has to bear the expense, but for legal expenses, the debtor has to bear the cost. Why is it that? Because it is the responsibility of the debtor to pay to the creditor. In a sale contract or any in a sale contract, I am as a creditor, let's say seller. In a sale contract, a seller's responsibility is to deliver the sold commodity or the asset. It is my responsibility unless and until we agreed that the delivery charge will be borne by the debtor. Usually, it is the seller, because it is my responsibility as a seller to hand over the commodity to you as a buyer. The buyer has the responsibility to pay. Now, whoever has whatever responsibility, he needs to bear the cost associated with it. As the example, the seller usually, if it is not stipulated in the contract, usually the seller will have to bear the logistics for delivery. Likewise, if there is any charge to pay, if there is any payment gateway cost, this and that, usually the customer will have to pay unless they have agreed otherwise, right? Now, in this case, it was the responsibility of the debtor to pay on time. He did not pay. And because of his negligence and misconduct, there has to be an additional charge borne or cost borne by the creditor, by the institution. Why would the institution bear this expense for something which was not responsibility of him, rather it was the responsibility of the debtor? So that's the rationale, that's the logic. And I believe you can understand now that charging a compensation or penalty outrightly on that defaulted amount is riba. However, charging legal expenses is different, and that is fine. Okay, next question from Rafiu, SS23. When agency is paid, it falls under Sharia rulings on Ijara. Why is, I think I already addressed this question earlier. Thank you. Since Sharia standard carries 60% weightage while having 59 topic, Gum standard carry 20% for 9 topic and audit standard 20% for 5 topic. Will it be more than 100 questions, or the marks for every standard will be different? Uh, so this time, as you know, CSAA was introduced for one last time with a bit modified version of uh, additional governance standards, additional share standards, as well as audit standards. So I don't have the exact detail with me how the questions will be reassigned, but usually last time also we had 4 governance standards and 48 share standards. So based on the weightage, the number of questions will vary. But I don't think it will be marked separately. It will be total number of questions based on the assigned weightage, and you have to get a gross percentage, as somebody else mentioned earlier, 70%. If I'm not mistaken, you have to get it from the gross number of questions. I hope that answers your question. Okay, Magamed again, say standard number 4 on settlement of debts by set off. The characteristics of debts are multiple: kind, type, description, maturity. What is the difference between kind and type? Kind and type. Okay, I need to go to the standard. Say standard number 4. Let me go to it. The standard is about settlement of debts by set off. Basically, set off in Arabic is known as muqasa. Okay. Because you didn't mention a particular clause, and I don't fully recall what was meant by kind and type, so it will take quite some time for me to go through the entire standard. But in general, um, I think if when they talk about kind and type in debt, usually it is the type would be usually either it's a monetary debt or commodity debt, because sometimes um, I may owe to someone to deliver something. Let's say in Salam. In Salam, the seller has a debt, but that a debt is not a monetary debt. He is supposed to deliver certain commodities after certain time, right? Monetary debt is when I am supposed to pay some cash, usually, which is what happens in most cases. So I think usually type is by type, usually that is what meant. Kind, what is meant, I cannot recall fully. But if you mention a particular standard, I will be happy to go through, inshallah. Particular clause, sorry, then I will be happy to go through and share, inshallah. All right. Assalamu alaikum from Fa Omar Sanyang. What is the difference between Sharia Supervisory Board and Central Sharia Board? Kindly explain as a six conversion of bank under non-permissible receivables. 811, new owners are not obliged to dispose prior haram wealth, and 813, revenue of doubtful permissibility should not be disposed of. Okay. First, I address the first question, which is the difference between Sharia Supervisory Board and Central Sharia Board. So Central Sharia Board sits at the central level of the country, of the regulatory body, for example. Let's say under the central bank or the Securities Commission or the regulatory body that governs the financial institutions of the country. That is what known as Central Sharia Board. And SSB or Sharia Supervisory Board is the Sharia board that sits at the entity level. Let's say for a bank, for a takaful company, for a microfinance entity, etc. The responsibility of the Sharia Supervisory Board at the entity level is to advise at all matters of that particular entity, whereby the responsibility of the Central Sharia Board is a bit different, because it is more, sometimes it's more strategic, sometimes to harmonize between the different fatwas. So let's say there are 8 SSB in the country, and each is saying different fatwas on a particular product. So the CSB will come and CSB will say, no, this is permissible. So everyone will follow that. So the role of CSB or Central Sharia Board is bit more strategic, bit more macro, and the role of SSB is more micro for the particular entity. Okay, your next question was about SS6. So SS6 is about conversion of a conventional bank to an Islamic bank. Okay, you referred to two clauses, 8.1.1. Let me go through. Okay, yes, I have it. It says if a conventional bank is acquired with the intention to convert it to an Islamic bank, the new owners are not obliged to dispose of interest and impermissible earnings that have been earned before such acquisition. So basically, when a new owners come, they don't take responsibility of the previous happenings. They purchase the entire bank as one single asset, which includes permissibles and non-permissibles, with a good intention to convert. So they don't bear the responsibility of the previous owners. This is a scenario where the entire bank is acquired by some other bank or some other group of company, etc., etc. If the existing owners are basically taking over, and then I think in some other clauses, let me see, you mentioned about 8.1, 8.1.3 is not about it, but there is a different clause. You can see that where the same owners, if they continue, then they have to dispose of these non-compliant earnings, but only if the of the same year. If it is going to next financial year, then they don't have to settle the previous financial year. And why so? Because as you know, in contemporary companies and musharaka, we consider the musharaka to be renewed as if it's a new company altogether after each financial year is closed, right? So after the previous financial year is closed, it is as if a new company has been formed. So they don't have to donate for the previous year as a company. However, as an individual, it, I have to purify my wealth if I have earned non-halal income. So that is a different issue altogether. Here we are talking about the bank level. On the bank level, do we have to give to charity or not? That is basically the idea. So under 813, you mentioned revenue of doubtful permissibility should not be disposed of. Okay, what he said, the clause said revenues not yet received that are of doubtful permissibility are not subject to compulsory disposal, whether they are earned before or during the financial period in which the bank decides to convert. The same rules apply to revenues of doubtful permissibility that have already been received because of a belief that they are permissible on the basis of an interpretation of a person who is qualified. Okay, so you can see the justification of this clause at the later part. What we can see here is these revenues are not subject to disposal, compulsory disposal. You see the keyword. The keyword is compulsory disposal, meaning they are not obliged to dispose, but they can dispose. And why they are not obliged? Because these revenues are categorized as doubtful permissibility, meaning some scholars who are of course qualified, they gave fatwa that these are permissible, and others say they are not permissible. And because there is a room of istihad and it is issued by qualified scholars, so we don't oblige them that you must give this to charity. We can allow them to keep. Because remember, when we talk about institution, it's a big thing. It's not individual. For individual, anything doubtful, I may give, no worries. But when it comes to institution, as long as it is not clearly haram or prohibited, we may not impose that you must give to charity, right? That will negatively impact the financial institution. So that's what being explained in this particular clause. Okay, Muhammad Salahuddin, does the exam have mathematical calculations? I don't think so, because this is not accounting, exam. If it was accounting, perhaps in that case, but usually in that case, I don't expect so. Okay, from Rafiu again, SS46, Wakala bil Istismar. In clause 10.2, if the investment agency is restricted to activities that yield a minimum specific profit margin and the agent does not find such an investment, then it should seek the principal's consent before investment. If it invests in a lower yielding transactions, it is liable to compensate the principal for the difference between the profit earned and the average profit prevalent to the market in the market if it is less than the stipulated amount or percentage. It is not liable for the minimum profit margin specified for the investment by the principal. Okay. So what is your question about? The question is not mentioned, but I think I can assume the question could be like, how is it that the wakil is liable for this minimum amount? Or the rationale could be because the wakil has a responsibility to comply with the instructions of muwakkil. The agent has to comply with the instructions of the principal. The principal mentioned that please invest my asset for a yield minimum 10%, for example, per annum. If the wakil finds it, okay. If the wakil doesn't find it, then he should communicate this with the principal, and only after his permission he should proceed. If he does not proceed according to the permission, then it's a negligence on behalf of him, right? Because he did not comply with the instructions of the muwakkil, and hence he is liable to compensate. I believe that's the rationale. Thank you. All right. Anum Nas, can we still start preparing and pass? Why not? Why not? If you are totally new in the Islamic finance, then you may have to still check if you are okay with the concepts. But I believe it's still we have ample amount of time. If you really prepare well, you can pass, inshallah. Saad bin Qasim, Salaam alaikum. Now short term is remaining for exam. So should we should we spend time on appendices as well? Okay. In appendices, there are few. There is one called Sharia basis, right? This one usually it is for our own selves, meaning that it enhances our understanding of the Sharia standards. But usually exams do not come from there. But it really helps you enhance the understanding. Then there is appendices on definitions. This is important because sometimes IOFI will ask questions on definitions. So that is definitely important, and we need to go through these. Other appendices are not needed. Okay, next question. In Amur Rahman, Assalamu alaikum. In exam statement of the standard and scope of the standard will be examined. I just responded to this. The Sharia basis is not usually the subject matter of the questions, but it really helps enhancing the understanding. But definitions are important. Okay, next question from Demi. Assalamu alaikum. What is the zakat paid investment accounts or shares that you intend to sell? Is it 2.5% or do you still have to calculate the zakatable assets? Okay. What is the zakat paid on investment accounts or shares that you intend to sell? Okay, so whenever we calculate zakat, we have this same formula. We look at zakatable assets. So if it is investment accounts or investment shares, we have to see what is the zakatable asset or how much zakat is on these companies. When we don't have the details, that time usually scholars will mention that you take the entire amount as zakatable and then you calculate zakat. For example, I invested $100 in a company. So usually I have to check the company's zakatable assets, find how much zakatable asset they have. Let's say they have 50% zakatable asset. Okay, meaning 50% of my investment is zakatable, which is $50. So I have to take 2.5% of these $50, which is $1.75 something maybe. 2.5, yeah, 2.5 divided by 2. No, it's not 1.75 cent. I think it's lower than that. 1.12, I believe. So uh, if I don't know these details, at that point, scholars will say, okay, you take the entire $100 and give shares. So this is one. Another one is if it is shares and I purchase the share to sell in short period of time. Of course, everyone purchases shares usually to sell, either in short term or long term. So let's say in short term, I want to sell. So the ruling in this case is the share is also considered like a zakatable asset itself, meaning that on the date of my zakat calculation, I will take the market value of uh, these shares and calculate zakat on the entire amount. So let's say I invested $100 per share. Now it has become $115. So I have to take $115 and then calculate 2.5% on it to calculate my zakat. I hope it is understood. Saad bin Qasim, what is the difference between ijara and wakala bil ujra? I have discussed this in details. If you have missed it out, you can check the video later on, inshallah. Will it be examined too, or only the statement? Okay, I think Inamur Rahman, what you have asked, I have already mentioned. You asked about the appendices of the standards. I mentioned what to look through and what not to. Ahsan Raza, you mentioned Assalamu alaikum. Apparently, there are some translation errors in the Arabic version of Share standards as compared to the Arabic version, like clause 4311 and 441. So please explain which one of the partnership in command and company is a financing partnership and which one is a personal partnership. Okay. So in cases where you spot on some error between the two translations, two versions, you can always take the Arabic one as the main source of truth. The English one may have an error. You can keep mark it and later on inform IUFI as well to update it in the future versions, but you can take that one. But in general, you mentioned which one is financing partnership and which one is personal partnership. Uh, Company limited by shares is a Shirkatul Aqd. Partnership compendium is also Shirkatul Aqd. I don't fully get your question properly. The main concern in the question you have, it's not clear to me. Perhaps you can ask again with a bit more clarity, inshallah. Khalid Yusuf, salam alaikum. Please shed light difference between Hamid and Arbun. I have done so in a very detailed manner. I hope you already listened to it and you can go through it again if you have missed it out. From Shakir, Assalamu alaikum. Jazakallah khairan for the support. What strategies that we have if the candidate gets 66 and 68 out of 70 marks in the exam, please? First of all, I mentioned earlier as well, I don't recall fully if it is 70%. I didn't see this document for a long time, so I don't recall. Maybe Brother Hassan, you can help me if it was 70%, but definitely if it is below 70, then they have only one strategy. It will be mentioned that the exam was not successful, meaning you failed. And may Allah save us, everyone, from that. Okay, Mustafa, what is the difference between ijara and wakala bil ujra? Subhanallah, this question came up so many times. I have mentioned this as well. Muhammad Abu Bakr, Assalamu alaikum. Kindly shed light on the permissibility or non-permissibility of institution purchasing an item from a supplier on sale or return basis. Sale or return. Okay, sale or return, meaning if I can sell, I sell. If I don't sell, I will return it. Okay, usually this is known as option or khiyar, right? In khiyar, if you, we mentioned the standard number earlier. There is a separate standard on different options. For example, we have SS48, but this standard does not discuss all the options we have. Oh, there is another. Sorry, there is another standard, SS51 and SS52 on different types of options. Like in SS52, there is either or options and cooling off options. So if you look at cooling off options, also known as khiyar shart, in that option you have a specific time period for either to proceed with the contract or rescind the contract or to void the contract. So let's say the institution has this contract with the supplier that if I cannot sell within 1 month, then I will return it. Meaning I will void the contract and I will return the items. Now within this 1 month, the institution was already able to sell to some other client. By selling it to someone else, it is already considered as ijaza. Ijaza means proceeding with the contract. So the option is immediately terminated and it will be considered as the sale has completed between the vendor or supplier and the institution. But if within this 1 month they haven't, if it was not able to sell, then before the 1 month, it has to come back and give return to the supplier. So ideally, I think what you asked is permissible. It just needs to be carefully crafted. Next question from Rafiu. If the investment agency is restricted to activities that yield a minimum, I think I responded to it. Okay, I think you just elaborated a bit. It is liable to compensate the principal for the difference between profit earned and the average profit if it is less than. Okay. Question: the clause difference between the profit earned and the average profit prevalent in the market, if it is less than this, is not clear enough. Okay. In this, I explained the clause earlier, so I will not explain more in the context, but just to elaborate based on what you have asked, added in this particular question now, the market average return is basically what other fund managers or others usually make. We may take 3 samples and make it an average, for example. So that is one way to do the average. And the actual profit earned is the actual profit amount, the profit that has been made by the wakil. Remember, this liability is because he did not follow the instruction of the muwakkil. That's why we are making him liable. Now, how does he fulfill the liability? Is by paying the difference between the profit that he made and the profit that has been prevalent in the market as a market average. How do we calculate the market average? As I mentioned, this is for any other case as well. We have a particular terminology known as Samanul Mithil. Samanul Mithil means a market price or a price that is prevalent in the market. And how do we take it? Of course, we take the location of the market. We take the type of commodity. So let's see, if I'm looking for market price of rice, then I have to look for price. I have to look for the location. Where is it sold? It is sold in a wet market or dry market like pasar, or it is sold in a online, or I have to take that type of the same type of the market, and based on these two or three different variables, we can easily get the average. The idea is to compensate, and when we ask him to compensate, we should not uh, you know impose on him something that he is not liable for. So to be fair with him as well, we take the market average basically. From Anum Naz, I think I already answered your question. Ahsan Raza, there are some other examples of transaction translation errors. So how could we know which is correct? How could we know? In most cases, I mean, it's a good question. How do you know if there are translation errors? There are not many actually. There are few. If you find it like doesn't make proper sense, or sometimes like you feel that it should say it's not permissible but it's saying permissible, then you may have a doubt and you can cross check against the Arabic. But otherwise, in most cases, because if you are following the latest version, IOFI's website has already the latest version, then most of these errors are already corrected. Thank you. Daniar, we have a question from you. Laila oversees a Waqaf that owns a bookstore. Considering the shift toward digital media, she contemplates selling the bookstore and using the funds to create an online educational portal for Islamic studies. Is this considered a permissible substitution under Waqf Shari standard? Okay. I think I have to go to the detail of the standard, but in general, if it was permitted by the Waqif or the donor, then usually there is no issue. And otherwise, I think there are few criteria I have to look through. I don't recall, I don't have all these criteria in my memory at this moment. Uh, but if it is a compelling reason, then it could be substituted. And if it is permissible, then there is no issue at all, as I mentioned. Okay, then you have another example of Laila from Daniar. Laila provides a gold necklace as Hamijidiyah for a loan. If the lender incur expenses for storing the necklace securely, what does the Shari standard number 57 gold and its trading state about these expenses? Okay, quite interesting. So we have a number of things here. Number one, it's a loan. Number two, it's a Hamijidiyah. By the way, we usually pay Hamijidiyah not for loan, right? Uh, Rather, Hamijidiyah for Uqud al Muawadat, commutative contracts, like sale contract, for example, not for loan. So it shouldn't be a loan. Let's call it a financing or share compliant financing or sale contract. And then the next question is about storing the necklace. So in this case, actually, it's not becoming a Hamijidiyah. It's becoming a Rahan against the loan. So you use the word Hamijidiyah, but it appears to me as a Rahan. Rahan means a collateral, a mortgage. For Rahan, if there is a cost for safekeeping of the Rahan, then usually it is borne by the Rahan keeper, meaning the owner of the asset. The Murtahin, the one who is storing it, in other words, the lender, is basically an Amin taking care of it. That's it. He's a trustee, he's taking care of it. But the cost of safekeeping it usually would be borne by the owner of the asset himself. So I think that should answer your question. Magamed again, can you explain the concept of honest money? I have done that, so I will skip it. Mohammed M. Salam, how will the new format 20% government standard 20% audit affect the way that we prepare for the exam? What should we concentrate on in audit and governance? Basically, as I mentioned earlier, in audit and governance, ensure that you have read through all the standards. As long as you have read through all the standards, you should be safe, inshallah. Okay, then we have again another question from Rafiu. I think uh, I have responded to it. If I'm not mistaken, let me check through. SS23, again, agency contract, A clause 8.2, the approval or denial of a contract concluded by an uncommissioned agent is subject to the discretion of the owner. Approval of such contract by the owner should also precede revocation of the contract by either of the two parties. Otherwise, a new contract has to be initiated. If the owner of the property does not approve the act of the uncommissioned agent, the act becomes binding to the latter if he did not declare at the time of signing the contract that he had no authority. Okay, what is the last two sentences? Okay, in the last two sentences, so firstly, what is this clause talking about? The clause is talking about an act of fuduli. Fuduli means who pretends or who says that he's an agent and he sells someone else's asset, but he did not get a proper authorization from the owner. So let's say I sell to you a property as if I own the property, but actually the property is owned by someone else. And I did not have any permission, any authorization from that someone else to sell the property. So in this case, I am a fuduli. I am an uncommissioned agent, right? Now, what is the consequence of this uncommissioned agent? Firstly, in the first part of the standard clause, it says that I should obtain approval from the actual owner before revocation of the contract between us. Like before, if there is a revocation by either of the uh, parties of the contract, then the authorization doesn't have any impact. If the parties have already decided not to proceed with the contract and then the owner says I'm okay, then we have to create a new contract because the previous contract is already invalid. The last part of the clause which you actually asked about, it says that uh, uh, approval of such contract, okay, otherwise a new contract, okay, if the owner of the property does not approve the act. So if that other person did not approve, okay, then this action means the one that I did as an uncommissioned agent, it becomes binding on me. What does it mean? Means if there is any cost or something, then I'm basically the consequences bearer of this contract, because the owner did not approve, he didn't know even, right? So he does not bear any consequences of this contract. But if he has approved it, then it will be considered as if from day one he has been involved. So if there is any cost or everything, just like an agency contract, I will be an agent and he will be the principal, and all the cost will be borne by the principal. If it is not approved, then everything is on me. I have to bear the consequences and the cost, etc. Okay, from Fa Omar in SS 26 Takaful 56, when the company is liquidated, all provisions and accumulated reserves pertaining to insurance should be spent on charitable purposes. Okay, so basically this clause is in from Takaful standard. As we know, conventional insurance is prohibited because it's a commutative contract. Commutative contract means what? I give you something, you pay me something. I sell you some commodity, you pay me a price. I give you some service, you pay me fees. So that is commutative contract. Conventional insurance is designed as a commutative contract, as if like we are paying a premium and we are getting a service. We are getting a asset or commodity. Now, what is that service? The service is a service of uncertainty. If I die, then they will pay me. If I have a crash, then they will pay me. So all these things are uncertain. It includes extreme gharar and also element of tibar or gambling, and that's why scholars have unanimously agreed that this is prohibited. Now, in the Islamic insurance or takaful, we structured the same thing on the principle of charity. So when I give premium, I actually give charity. When I claim, I get charity back. So the entire fund is basically fund of charity. Tabarru. Tabarru means charity. Now, because it's a charity fund, when it is liquidated, right, we have some provisions. By the way, what is provision and reserve? So provisions, reserves, for example, we kept some reserves from the fund, from the charity Tabarru fund. We kept few things aside that if it needs so, then we will spend from it. This is, in simpler word, this is provision and reserves. So the provision reserves are also part of the fund, Tabarru fund. It's not owned by the company shareholders. And therefore, if the company is liquidated, This money should not go to the shareholders. This will go to charity or charitable purposes because the fund itself is charity. So I hope that answers your question. Thank you. Wise, please explain that a loan on the basis of wakala can bank disburse the money to the borrower account so that he will buy products from vendor by himself. Okay, so first of all, it's not a loan. We should use the term financing. Now, if it is based on wakala and the bank gives the money directly to the borrower account, borrower account, yani the customer, the client, right? Directly to the customer, so that he will buy the products from by vendor by himself. So as you know, I think this question will come for, let's say, murabaha, right? So in the murabaha, the bank is supposed to purchase directly from the vendor, but the bank employs the customer as a wakil to purchase on behalf of him, right? Now, in this case, if uh, if the bank disburses the money directly to the vendor, then that's the best, as mentioned in IUF standard. So IUF standard says the money should be paid directly to the vendor, even if the customer as a wakil is the one who is purchasing on behalf of the bank. Why? Because when we give the money to the customer's account, things happen. Maybe he will use it for himself, maybe he will not buy it, so a lot of different issues happen, and to avoid this we need to pay directly to the vendor. So I think this answers your question. The customer should not be given the money directly, rather it should be directly paid to the supplier or vendor. In some cases, let's say, for very valid reason, we have to pay to the customer. We have to really have a very proper governance and control to ensure that the customer has given this money to the vendor, the thing was purchased, and the possession was given to the bank. So we have to ensure all of these. If for whatever reason this was not followed. Mohammed, key points on selling of debt. Any principles? I'm sorry, it's a long thing. If you have any specific question, you can ask, but otherwise, it's a long question for me to answer. Diallo, why bilateral promise resembles a concluded contract? Okay. In bilateral promise, two parties, one party say, I agree to sell, other party say, I agree to purchase, and both sign. So when they both sign, it resembles as if both have entered into a contract. Because what is a contract? A contract is basically a combination of offer and acceptance. So if I say I want to sell, other parties say I want to buy, and both parties agree, then it resembles a contract. What is the problem when it resembles a contract? The problem is, in a promise, we don't intend to buy or sell right away. Rather, we want to do it in a future. I promise that I will buy. I promise that I will sell. Now we cannot, in Sharia, we cannot enter into a contract for future. The contract must have words that I sold. In Arabic, we call sigha of fi'l madi. Madi means past tense. I sold it. We have concluded the contract. We shouldn't have that we will conclude the contract. Then this is not a contract. So when we do a contract with future tense, both of the counter values are deferred, because when we say I will sell, meaning the price is deferred. I will buy, the commodity is deferred. Both of them are deferred. So then it makes it like a sale of deferred for deferred. Bay'ul kali bil kali, which is prohibited. Rasulullah SAW has prohibited from Bay'ul kali bil kali. Why? Because when both counter values are deferred, there is an extreme chance of gharar, and there is an extreme resemblance with gambling. And Rasulullah SAW has prohibited that. So, to summarize, bilateral promise, that's why resembles a concluded contract. We should have unilateral promise rather. Okay, from Khalil, Assalamu alaikum. Considering that client delay in payments, bank put penalty on client to submit charity. In this case, are you saying this should not be part of the contract but voluntarily action? I am saying, I'm not saying myself, according to IUFI, what IUFI suggested, yes, it should be not part of the contract. It's a separate undertaking to donate, and it's not a voluntary action because whenever a document is signed within the banking sector, it does not keep it a voluntary. It's still a binding one, but here he's saying that I promise to give charity. He's not saying I promise to give riba, or he's not agreeing on giving riba. So the difference between the two is when you put inside the contract, it makes it riba and then we give to charity. So it is as if we have agreed to riba to a certain point, and then because it is riba, we are giving to charity. In an undertaking to charity, we don't agree with riba in any case. Rather, the customer unilaterally promises to give charity. So there is this difference. I hope you understand. Can Hamijiddiya be treated as Arboon after signing the contract? Meaning what you are saying, can Hamijiddiya be part of the price after signing the contract? Yes, it can be. From a rough view, what are the standards that will need calculations and what type of calculations? I don't think any of the Sharia standard will need calculations. From Rayan, Assalamu alaikum, regarding the example on Hamijdiya, can the bank ask for example, the bank sells the Toyota S43, actual loss of 7,000 when the Hamish was 5,000. Can the bank ask for a compensation? Yes, the bank can ask for a compensation of the remaining 2,000 riyals. But because the client has already ran away, it is difficult to recover from him. And that's the reason the bank asked for Hamish in the first place. So even if there is another additional loss of 2,000, the bank has already recovered most of it. But yes, it has the right to ask for the rest. From Yahya, please explain indices. Indices are basically indexes. Indexes are statistical numbers. Forming based on statistical numbers. It basically gives us some indication to compare, to understand the situation based on data. Some example of indexes, for example, some statistical numbers, for example, if you see the GDP data, inflation data, and different types of data. So when we look at the inflation last year versus this year, we know if the inflation has become more or less. If you look at GDP last year versus this year, we know if the GDP went high or less. In the same fashion in indexes, let's say stock index, if we look at the number from yesterday and number from today, we can understand if the stock market is going high or going low. So indexes are basically data-driven way to give us indication of the market, indication of the asset class, etc., etc. From NHA, Assalamu alaikum. I have a question in operating lease. In case of customer declining the leasing contract, does the security deposit return back to customer? Security deposit, okay. If I understand correctly, in operating lease means the bank will first purchase and then lease it to the customer. So what you are asking is if the customer declines the leasing contract, meaning that he just runs away instead of leasing it. In that case, if the bank has already taken some hamijitya from him, we will have the same scenario, meaning if the bank has sold to a third party, then it can freeze the actual loss, if any. Right. So will have the same issue, or we will have the same thing here because he declined the lease contract. Even though if it was not a sale contract, I believe we will have the same ruling here. From Aisha, what is the difference between Aina and Tawarruk? Aina is buyback. I sell you something in the condition that you will sell it me back. Why? It's basically a trick for bypassing riba, but then most majority scholars also consider this as riba. For example, I sell something to someone at $100 in the condition that he will sell it back to me at $110. or I sell it to him at 110 in the condition that he will sell me back at $100. What is the outcome of this contract? The outcome is that I'm giving him $100, $100, and he will give me $110. So it's basically uh, apparently it's a sale, but it's not a sale. It's outrightly riba. Tawarruk is different. Tawarruk is basically also known as commodity murabaha, where I need money, for example. So I ask someone to lend me money, but he doesn't want to give me money, because if he gives me money and he charges extra, it will be riba. So what he will give me commodity. He will sell me commodities. So let's say I need $100,000. I go to the financial institution. The financial institution will buy commodities worth $100,000 and sell to me at $110,000. Meaning what? I have to pay back to them $110,000. And now I have the commodity which is worth $100,000. Now I don't want commodity actually, I want cash. So I go back and I ask the financial institution, or I myself go to the market and sell these commodities at $100,000, because the price was 100,000 in the market. After selling this to the market, I get my $100,000 cash. And remember, in the first leg, because I purchased this commodity at 110 from the bank, so I have to pay back 110 at an installment to the bank. So in Tawarruk, we have three transactions. The financial institution first will purchase from the market, then it will sell to me, then I will sell back to the market. So with these three transactions, the effect is I get some cash and I have to pay some extra. There is a difference between Tawarruk and Aina. In Aina, it goes back to the same seller. In Tawarruk, it does not go to the same seller. The IFI purchased from the market, it sells to me. And then when I sell back, I don't sell to the same IFI, rather I sell to a third party. And that third party is not the first party from which the bank purchased. Rather, it's a complete different party. So that's basically what Tawarruk is. Maghamed again, regarding standards 10 and 11 of Salam Istisna, and regarding concept parallel Salam and parallel Istisna, could you please explain the concept? The concept of parallel Salam and Istisna is we will have parallel. Parallel means side by side. So we have one Salam between bank and client, then we have another Salam on the back end between bank and a different client or a different vendor or entity. Likewise, in istisna, we have one istisna between bank and the customer, and then we have back-to-back another istisna between bank and another client. So parallel means side by side. The idea is the bank doesn't have any interest on the istisna asset or the salam commodity, right? It wants to go to the market and sell it and make cash. So that's why they will have two salam side by side, two istisna side by side. I hope it answers your question. MashaAllah, there are so many questions. Fatima Bari, Salam, does internal Sharia review is the same as internal Sharia audit? Actually, internal Sharia review and internal Sharia audit is a bit different. Back then, if you read, it seems almost the same. But now, with more and more updates in the international Sharia governance, is a bit different. So usually, internal Sharia review is done by people under the Sharia review department. In the standard, it says by the Sharia board, but nowadays Sharia board will not do. There is a different Sharia review department, and their job is to continually review the products and processes over the year, throughout the year. Internal Sharia audit is a different department, and they are a bit independent. They will report directly to the audit committee. They will come after the year end, and they will see what happened in the past year, was Sharia compliant or not. So again, Sharia review is a continuing process. It will go throughout the year. It will find if there is issues, etc. It is basically helping the management to ensure Sharia compliance. Internal Sharia audit is different. It is coming as an independent body to look after the past year's transactions and ensure that Sharia was fulfilled. So we can say that internal Sharia review is like second line of defense. The first line of defense is the product owner or the business line. The second line of defense is internal Sharia review. Internal Sharia audit is the third line of defense. If you have external Sharia audit, just like in some countries they have already introduced that, then it is like fourth line of defense. So with these all defenses, we try to ensure that the Sharia compliance is taken care of properly. Anum Nas, does the result announced same day? No, it's not same day. Uh, Diallo, here is a clause I was referring to, stand number 11. A contract of istisna cannot be drawn up on the basis of murabaha sale. For example, by determining the price of istisna on a cost plus basis. Oh, okay. I believe what is mentioned here that in istisna, when we determine the pricing in the contract, we don't determine as this is cost, this is profit, this is total. No, in istisna, we put the whole price as one price because the cost might go up and down. You see, in murabaha, we purchase the asset from a vendor, we know the cost, we put a profit, done. But in istisna, it's a long, it depends on so many variables. You have to acquire the raw materials, you have to put your labor, you have to put this and that effort. So the cost may vary. And that's why here we will just put a cost instead of cost plus profit. Assalamu alaikum. Short explanation of governance standard 129. Subhanallah, 129 is a lot of thing. I don't, I cannot explain in brief for governance standards. You need to definitely study, go through, and perhaps look at some of the videos that we have on. Shakir Omeri, when the offering party sends through a website or email a message containing all rights and commitments pertaining to the contract in question without retaining the right of withdrawal if the message is accepted, that message is considered as an offer. Please elaborate for whom without retaining the right of withdrawal for buyer or whoever accepts. Okay, let me go through the SS. But you did not mention the clause number. Let me see if I can find. Please always mention the standard number as well as the clause number. Audio. Okay, I think I found it. It is in clause 5.4. Okay. So under the header or clause number 5, which is expressing offer and acceptance in online financial contracts. What it says, when a contract is concluded through website, clicking on the no, you didn't say no, it's not that. Okay, sorry, I have to skip your question. If you could share the actual clause number, maybe I can relook into it. What is the difference between ordinary murabaha and murabaha to the purchase orderer? Ordinary murabaha is basically the classical murabaha, where a seller basically tells the buyer, discloses to the buyer the cost and profit. That's it. In a murabaha to the purchase orderer, a buyer comes to the seller, asks him to buy something from someone else, and then the seller discloses the cost and profit to him. So in murabaha to the purchase orderer, we have the customer coming to the IFI, asking the IFI to buy, and the IFI then buys it and then sells based on murabaha to the customer. So it is a bit different than the traditional classical murabaha that we have. What resources are available to study auditing standards? You can refer to the courses we have in TAIF or other resources I cannot think of. Uh, is the standards, basically you have to go to the standards and clauses. Mohammed, again, regarding the exam, is there a single answer to choose? No, it's multiple answer. I mentioned already Sharia basis for each standard in the appendix. Do you think it's not important for the exam? I mentioned already it is important to understand, but in exam, of course, it is important for exam because in exam, When they ask a question, you don't have a concrete answer, but if you know the Sharia basis, it will be easier for you to understand the answer. But what I meant earlier is that questions may not come directly from the Sharia basis. Will the exam be both in Arabic and English? Yes, you will see both questions side by side usually. Kashif, Rehan, who will pay zakat in salam transaction, buyer or seller? Any specific software or specific window uploading requirements in laptop, for example? Okay. For zakat in salam, who will buy, buyer or seller? Uh, you mean for the commodities? If it is for the commodities, the buyer has already acquired it, then definitely the buyer will pay. But if the buyer has not acquired it, then it will be the seller who has to pay, because it is a debt that he is owing to the buyer, and until he has given to the buyer, it does not enter the ownership of the buyer, right? So he has to pay. Assalamu alaikum. Jazakallah for the course. Till when we have access to the course? I'm not. I believe you can directly contact Taif. Indices I already mentioned. How to remember whether the contract is binding or not? Does bilateral binding contract not permissible to all contracts? Contracts are binding by default. Promises are not binding. Contracts are binding. Binding meaning no one party can, uh, void the contract. If you want to void the contract, it requires both parties to mutually agree on avoidance. So definitely, it's not every contract is binding. Difference between amana and zaman. Okay, amana is trust. In wakala, in mudaraba, in musharaka, the one who manages the business is an amin, is a trustee. A trustee by default is not liable for losses unless and until there is a negligence, breach of contract, or misconduct by the trustee. If he has either of these, then he will be liable to only pay up to the principal, not the profit. Doman is guarantee. Now, guarantee, we can take different types of domain, different types of guarantees. For example, we can take Rahan, we can take third party guarantee, Kafala, etc. etc. But the question is, when can we liquidate the guarantee? When can we charge the guarantee? The answer is again, if it's a wakala, mudaraba, musharaka, these type of contract, we can only liquidate the guarantees if there is misconduct, breach of contract, or negligence. If it's a sale contract, I have sold, as an IFI, I have sold something, and because of it is sold, I am supposed to get some price or payment. Now, getting this payment is not a trust-based contract. It's already sold. It's a liability that is owed to me by the customer or by the debtor. If he cannot pay the liability, I can just liquidate the guarantee and can charge him. So as you know, in IOFI, there is a separate standard on guarantees. Please explain the right of shufa. I don't get really the concept. Shufa or preemption means, let's say I have a property, okay, and the property just beside my property is getting sold, right? Maybe it was a shared property and my partner is selling, or maybe just it is neighboring property. So as a neighboring property, I have the first right to purchase it. If I don't purchase it, then it will be sold to the market. Why is it so? Because if it is sold to someone else who is completely different and he has a lot of different issues, etc., etc., I could be a victim of zulm or oppression by my neighbor. So to protect me as a neighbor, Sharia has given me the right of preemption, meaning if I know that the owner has sold to someone else, I can go and claim to the court that I, as the neighbor, has the first right to buy it. So the court will order my owner to invalidate the contract he made with other party and to sell to me to that same price. If I don't want to agree with this price, then it will be sold to other party. So that's basically the right of shufa or preemption. today it is also implemented in some other cases as well, not only in properties. We are only left with few minutes. I will try to get back with as questions as possible. In current banking practices, can you give me some examples of future and forwards contracts? Future and forward does not happen within banking itself. Rather, it happens in organized markets like stock market, commodities market, currency market, foreign exchange, foreign currencies, for example, or FX, forex. Sorry. So in these markets, futures and forwards happen, and Sharia does not allow these. The futures, options, etc., as Ayufi has mentioned. But today, Islamic banks usually they have to hedge in some cases, and they exercise forward contracts based on WAD, based on WAD, not the way the conventional banks do. So that is different, and that can be done in a share compliant manner. Difference between future forward swap contracts. Wow, it's a long discussion. In general, futures and forwards both are basically contracts where both counter values are deferred, meaning the price and the commodity both are deferred. But in forward, usually it will be settled, meaning it will be actually purchased by the buyer or the seller, usually, in most cases. In futures, usually it is not settled. Sorry, it is not purchased or delivered. Rather, usually it will be just reference of the price. So if the price goes up and down, later on they will just settle against that price. Meaning, in other words, it's not a genuine sale per se. It's a fictitious sale through which we people actually just gain based on numbers, which Sharia does not like. Sharia will always say if it's a sale, it's a sale. You have a commodity and you get price for it. So any such contract Sharia does not allow. Kindly brief the term charity, donation, penalty. Charity, donation is same. Penalty is what being charged when someone defaults, and it is in general riba, and that's why it is being channeled to charity or donation. What is imtiyaz? Imtiyaz, I believe, preference. Okay, giving preference, and I discussed about preference in the very beginning. You can go through again. Assalamu alaikum. Can tawarruk be done between individuals other than IFI and debtor? Can. If it can be done properly, can be done, no problem. Again, from Shakir, in tawarruk, the purchased commodities may go back to the same seller by chance, but not by the intent or predetermined. Correct, please. Uh, Somewhat correct, because when you say by chance, unfortunately, in many of the commodity platforms, they have structured in a way today that it is not by chance, but by structure, it goes back to the same seller, which is what IOFI has, prohibited. IOFI standard is prohibited basically in the share standards. Okay. Maghamed mentioned internal share review GS3 and share compliance GS9 is very much similar. You're right, because GS3 is a very old standard. Share compliance function is a very new one comparatively. So Sharia compliance function is how it works nowadays. Internal share review was back then, which is nowadays not mentioned, used as it is, as I mentioned earlier as well. How we can easily remember agricultural contracts? Anything to remember easily, you have to read. You have to read more and more. You have to memorize things if you want to memorize. Charity, donation, I already mentioned. Tips to prepare all Sharia standards, read and read and read and read and read. That's the only tip I have. In what condition option is permissible? Options are not permissible according to IFRS standards. Or options mean the options that are traded. But in Sharia, we have some Sharia compliant options. We have around 2 to 3 standards in IFRS standards. These are different. These are not traded. But options which are traded, which are purchased and sold, this is what Sharia does not consider as a valid mal. Okay, next question is when we'll have access to the mock exam? Can you put the documents presented in videos, please? I did not present any documents today. I just went through the share standards based on the questions. For the mock exam, please, I believe, Brother Ahsan, if you can respond. Alhamdulillah, all the questions are addressed. There are 2 questions which I did not address, which were based on the auditing standards, both from Brother Rafiu but I did not actually go through the auditing standards before for this session today. So I would not be able to answer. I'm sorry for that. Perhaps you can go through our sessions on the auditing standards in TAIF. I hope it can help you resolve, or you can also write these questions directly to TAIF and we'll get our team back to respond. Alhamdulillah, it has been 88 questions, the largest number that we had, if I can recall. Jazakumullah khairan, everyone. And yeah, back to Taif, Brother Hassan. Thank you.
Jazakallah Sheikh, thank you very much for your time. And I believe all the students who have joined, be it from Taif or outside, they must have benefit from the session. Inshallah, anybody who is interested to get this course, the availability of the course is available. I've put in the link in the chat. You can get the course. The course is updated. All the governance and auditing standards are already there, along with the Sharia standards. The facility is that you can watch the video as 2x speed in case if you want to skip or learn faster. Other than that, you have access to mock exam or FUSI if you're taking the course. So thank you, Sheikh, once again. Thank you for other advisory for joining and conducting this session together. We are always honored to have you on board with us, working and collaborating together for the benefit of the people and the Islamic finance industry. Jazakallah, Sheikh. Make dua for us as well. Assalamu alaikum.
Thank you so much, Brother Hassan. Thank you, Taif, and other team as well for organizing this. And thank you to all the participants today. You have been very patiently listening to me. And sorry if I could not elaborate as you have expected. And I wish and make dua for all of you that you can uh, pass this exam and be a grand ambassador of Islamic finance, inshallah. With that, we can close this session today. Jazakumullah. Assalamu alaikum wa rahmatullahi wa barakatuh.